This is the value of share under asset backing method or net asset. Whatever it is given, it is called book value. Here, whatever given in the adjustment, it is called the market value. Market value of each share. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Year College, a Temple of Excellence, MYSURU. I am going to handle in this session Corporate Accounting, third semester, Unit 4, Session 3 of BCom in favor of valuation of share. When you value the share, there are two methods. One is called net asset method, second one is called yield method. Under net asset, total asset minus total liability, capital employed, divided by number of equity share. Capital employed for equity share divided by market share of each share, yield. That will give the share value. In the yield method, first you have to write the average profit. What is the average profit? Total profit divided by number of years. Out of the average profit, minus taxation, minus transfer to reserve, minus preference dividend, divided by number of equity share, that profit available. Then how it is? Average profit minus taxation minus transfer to reserve minus preference dividend, profit to equity shareholder. Next, capitalize a profit. Capitalized profit divided by normal rate of return. Whatever the answer comes, market value each share is equal to capitalization profit divided by number of equity share. Move on. It's a problem. Whatever it is given, it is called book value. Here, whatever given in the adjustment, that is called the market value. This is market value. This is market value. Others are book value. Net asset method. You have to write book value or market value. Book value or market value of asset. First one is building revalue, market values. What's the value? Building 90,000. Machinery 45,000. Building revalued 90,000, machinery 45,000, trademark 7,500. What is next one? Stock 18,000. Debtors 33,000 minus bad debt 3,000. 30,000. Cash at bank 19,500. Don't take profit expense. Add the figure 90,000. 2,10,000 minus total liabilities which are the liabilities are workman savings account, workman savings account 11,250, creditors 36,750, add 11,250 plus 36,750, 48,000. 2,10,000 minus 1,62,000. No preference share is here. Capital to equity. Market value of each share equal to 1,62,000 divided by number of equity shares 75,000 divided by 10, 7,000. 1,62,000 divided by 21.6. This is the value of share under asset backing method or net asset. Next we will go to yield basis. Total profit for 3 years 30,000 plus 33,750 plus 39,750 minus bad debt 30,000 33,750 plus average profit to equity shareholder, average profit 33,500 minus tax. Have you got a tax? See that? Nil. Once again. Minus transfer to reserve the percentage 25%. $8,375 25,125 minus preference dividend. There is no preference share capital, nil. Profit to equity. Then, next step, capitalization of profit. How much profit available? 25,125 divided by, what is normal rate of return? 15%. 25,125 into 100 divided by 1,67,500. 25,125 divided by 15 into 100. 1,67,500. Market value of each share $1,67,500 divided by, how many shares are there? 7,500. 1,67,500 divided by 7,000. 22.33. Fair value $22.33 plus 21.6, 22.33 plus 21.6, 43.9 divided by 2, 21.96. Fair value. Say 20 rupees. So I have solved this type of in previous session also. In this session also, I solved under net asset and also yield method I have done. Both the method we divided by 2, that is a fair value. So this type of question will come from examination point of view. Be careful and go through the whatever I have solved the YouTube. In the last session problem, this session problem. We'll have one more problem of different type in the next session. Till then, goodbye.